There was a lot of movement in the stock market this week as big tech companies posted their earnings. Apple's sales declined 5% for the quarter, the company's biggest quarterly revenue decline since 2016. Google's parent company Alphabet also reported a steep decline in profit. Meanwhile, Amazon reported a revenue of over $149 billion for its fourth quarter. That's a 9% increase from the previous year. Facebook's parent company Meta also posted gains. David Kirkpatrick is with us. He is the founder of Techonomy, and he's going to help us understand some of all of this. So, David, these are all tech companies in one form or another, but they're all very different. What do you make of these earnings? What story do they tell for you?
Well, first of all these companies are in an unprecedented, difficult state compared to the decades that they've been growing with almost unrelenting energy. These have been some of the most profitable companies in the world in history of business, really. They've grown at an extraordinary pace. And in the last year and a half, roughly, they have almost all dramatically shifted into a fundamentally new mode of slower growth, declining revenues and profits in most cases, and a new focus on the basics of business, which they really hadn't had to show in the past.
What do you make of Apple's difficulties? And is there any conclusions we can draw about, I mean, Apple's a consumer product company, essentially. I mean, and Amazon also sells consumer products. Apple had bad earnings. Amazon had good earnings. Anything to draw from that?
Well, Amazon wasn't doing great by historic standards itself, but Apple really was hurt quite a bit by its supply chain difficulties they've had with the Chinese economy and COVID there. So that was a significant factor, I think, in their disappointing quarter. I mean, Apple did not meet analysts' expectations, I think, for only the second time in a decade. So these are very difficult times. The economy is tough. These are all, in general, hugely profitable companies, but they are in a different environment that is making life much more difficult.
And if that environment is difficult, I noticed Meta shares were up more than 20% on Thursday. Is that people making a bet about the environment getting better, or what's that about?
Well, that's an interesting, different kind of story, because in fact, Meta's revenues and profits are down. They've had a declining revenue for several quarters, which is historically new. But Zuckerberg yesterday on the earnings call talked about being the year of efficiency. And he is really starting to talk like a real business manager for the first time really ever. Because again, this is a company that more or less had just money coming out of its ears for literally a decade, where they almost couldn't do anything without making more money. And they have been hit very hard by a number of things. Apple changed the way that they allow Facebook and to target users around the internet. That was a big problem. The economy slowing advertising sales was a problem. But Zuckerberg has really decided to buckle down and focus on profit and revenue growth in a way that he never has before. And I think the market really likes that. Plus, they announced a bigger share buyback and a impairment charge. They're really sort of sticking to their knitting financially in a way they never have before. Zuckerberg has not been an attentive manager, but he is becoming one.
Speaking of those efficiencies and those kind of very basic business decisions, the tech industry's laid off more than 70,000 people in the last year. Is that in keeping with this view that they're sort of dealing with basic business decisions?
Yeah, that's another unbelievably new thing. None of these companies had major mass layoffs ever before. And most of them really, though, grew much too rapidly during the pandemic. All of our digital lives became much more intense. We all spent more time online. We spent more money on Amazon. This was really a global phenomenon, and these companies were doing great, and many of them made enormous investments during that period and hired a lot of new people, particularly Amazon. And they really got bloated, and now they don't need all those people and all those resources, and they're trying to adapt to a slower growth environment because the pandemic changed. We are now out of the pandemic, more or less, and we're not living such completely digital lives as we did.
That's right.
And that affects these companies.
In new territory. David Kirkpatrick, thank you.
Yes, thank you.